Hello guys, and welcome back to another YouTube video. I basically want to show you a trade that you could have taken during 80 session yesterday, banking a beautiful trade, targeting buy side liquidity. So look, let's get into it, let's break it down, and hopefully you can learn something from this video. So looking on the euro dollar, this is on the 4-hour chart. I'm essentially just marking up sort of my highest lows and where I see potentially price heading towards, okay? So as you can clearly see, we have a low swing high in the market. We have a leg, and as you can see, price has taken out this buy side liquidity here. So buy side liquidity at here, that's been swept from the market. Okay, so it's indicating that the bulls are in the market, the bulls are in control, and as you can see, price has pulled back now. And normally, what you see price do is you see price impulse, correct, and then continuation. Okay, so I was looking for the continuation phase of this and potentially take out this high. Okay, so now what we have to identify is our swing high, swing low, and you can do that by, let me do the fib. Okay, so the fib from swing low to swing high here, bang, and then I put as you can see here, this is 50%. So from that low to that high, once again, as mentioned, the Fibonacci retracement level, 50% is here, okay? And that's something we call equilibrium, which basically means that from this move, the price is balanced out. Also from this, we just tapped into the inefficiency here, that imbalance. And that's all it needed to basically push price up and continue further as it did, okay? And then obviously we see price rallying from this low put in the market. Let me just, from that low there, okay? We see price have a strong impulse move to the upside. So now what we're waiting for and that we're looking for is basically price to continue. We're already taking this high here, giving us a nice little break in structure. Price breaking up again. But what we want to see price do now is essentially take this buy side, okay? Buy side liquidity at coordinates. Why? Because that's the draw on liquidity. Liquidity is drawn to this high. It's going to want to take it. We're not going to come up this high and then want to fall from here. We're going to want to take the liquidity from here for where the buyers are at. Okay. So now what I can do, I'll jump on the smaller time frame and really pinpoint something in here in order to take the last buy up here. Okay. And we can do that by jumping on the 15-minute. Okay, cool. So what we're doing on the 15-minute, we're just looking at this price action here. Okay. So we have that high that was put in here. Got that high there. And then we also got this low, okay, from that wick. And that actually filled on the 15-minute, this inefficiency in here. So it's very, very balanced in terms of the nearest balance points or inefficiency. So now I've got this high and that low put in place, that's internally in here. I can now look at the Asia session just to look for a little sweep in here to then push up. Now, I just want to see if price is either in equilibrium of this move here. And as you can see, equilibrium basically, just below equilibrium in the discounted array. I want to see price in a discount in here in order for me to buy it to then tackle higher. And you got to understand, we're going. This is like a momentum trade. The momentum's in our favor. The buyers are stepping into the market. The buyers are pushing the market up. If I just play this out a bit, perfect. Okay, cool. So once again, first thing in the morning, Frankfurt open at 7. So 7 Frankfurt open. You can see here, Frankfurt opens open, and that's when we get that injection of liquidity, which is perfect. This is your Asia high liquidity, which would be top right, and then that's your Asia low. Okay, Asia low liquidity, bottom right. So essentially we want to see these get swept and then push in another direction, which obviously you have seen done here. But let's jump on the 1-minute time frame and actually see how you could have got into this trade through those wicks. So as you can see here, this is what we see now. I'm just going to get rid of this here just to make it a bit more clearer. Okay, this is exactly what we see. Now we see what I talk about time and time again whenever I break down the charts. Hopefully people start to understand and actually get this now, is something we like to call accumulation, manipulation, distribution. Essentially what it is we see price accumulate, which is moving sideways, manipulate some sort of IRL, internal range liquidity. This instance is Asia low, could be sell side liquidity, wherever it is. I then want to see displacement in the other direction. I then want to see a pullback. I then want to see basically another push to the upside called distribution. So accumulation, manipulation, distribution. Bear that in mind. Okay, that's exactly what I want to see. If I draw your attention over here, this is what we have to offer. So as you can see here, price was accumulating, i.e. price moving sideways just before this Asia low. Okay, and we know that's the IRL. We know that's some internal range liquidity there. We know that the Asia session traders are going to have some form of orders underneath that low, because that's where their session started, or when they were trading throughout their session. If they're getting into buy positions, they're going to have some orders resting underneath here. Okay, so that's the reason behind it. We then see at 7 a.m. injection of liquidity. Now at 7 a.m. is something called the Frankfurt Open, and at the Frankfurt Open is when the German traders basically their exchange opens and trade commences. And as you can see, as soon as Frankfurt open, what did we see? A massive sellers step into the market, sweeping that Asia liquidity. We then see price. Let me draw it out. It might be easier. So price comes like this. We then see price sweep those lows, trade back into the Asia range, retest it, and we see price push up here. Okay, and then that there gave you just briefly a little sweep of those highs there. Okay, for me that's enough to say that's a market structure shift. Price is now traded back into the range. We then swept that high just briefly there, as you can see, and now we're seeing price push away. Okay, so that's kind of what I was looking for. Okay, price to basically give that market structure shift, as you can see here. In this instance, this one's a lot more clearer in terms of the break, but it's still the same thing. As long as we take out that high, it's giving an indication that we want to push higher. Okay, then all you do then, you find your low point and your high point of that move that broke it. So in this instance, fibs would be this low here to this high. Perfect. Get rid of 50% in this instance. 0 I don't want. And let me just drag that out and make it big. Quickly check. Perfect there. Okay, cool. So within this setup, there's something else we need to see. We need to see price to come into some sort of OTE or any sort of confluence. Now, I call these my confluences. Because once that market structure shift is in place, everything should fall into place. Like this should just be seamless. Like literally just should be just so easy to do. So as you can see here, within our OTE, which is optimal trade entry, this is where you normally want to be getting into the market on these OTEs. Now, preferably, I normally like to get in during inefficiencies, but in this instance, there isn't one. What we have here, we have this 1 minute OB here, which is serving us for a confidence to get in. Now, there is inefficiency further up here. There's actually balanced price ranges running through here. But it's not in any OTE level, so I don't have interest in getting into those levels. I want to be getting into my OTEs, which holds more value for me. Okay, in this instance, there was no OTEs, but there was OB+. So that was the entry of that, reason to get in. Stop loss below. Many could say you could put it here. For sake of a few pips, I would just, because normally I'd do here, plus 1.5 pips, so it would lead at 30, which is just here. So that's exactly what I'd do. I'd make it just a bit bigger outside here, just so a bit of breathing room, allowing ourselves, if anything was to go wrong, we can obviously protect ourselves. And then the rest is history, like I normally say. You just allow price to deliver and do what it needs to do. So you obviously had first standard deviation here, taking profits from the table. You don't want to be essentially risking your whole position into these levels. You don't know when price is going to reverse. And that's why you did see a bit of rejection from here. And obviously it lines up nicely with this high in the market here. So yeah, take some partials from there. You'll thank yourself. Then obviously just further on, we're looking at standard deviation wise. Obviously we then took out that high there, which I think that was the previous daily high, because this was Wednesday trades. So that was the previous daily high, as you can see there. That was taken at 2 standard deviation. But as mentioned, the overall bigger picture was always this higher time frame buy side liquidity there. Okay. And what you can do is you can start taking, this is why it's so powerful to look at your standard deviations and look at overall TPs, is that okay, fair enough, you can get a beautiful entry here, but you need an exit plan. When you're actually going to get out of these positions, it's all good saying, oh yeah, I'm in these trades, I'm doing this, I'm doing that, I'm amazing, da 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 da. But how are you going to get out of them? That's what makes you a trader, not the actual placing the trade. Placing the trade is easy. I can teach my little sister this in 6 months. It's not that hard. What's hard is managing the trade, your psychology, everything that comes into play with managing an account like this or the trade like this. It takes a lot, and that's what you got to teach yourself. So obviously I just play this out now. 3 standard deviations, we start getting a little mess about. So what you do is, this is what I mean by partials, if no one understands. So what I normally like to do is, at key points in the market or key potential areas I think can reverse, that's 1 standard deviation, 2 standard deviation, 3 standard deviation, or even highs in the market. I kind of see how my trade lines up with these levels. That being said, I would then look to exit some of my trades. For example, at 1 deviation, I might take 25% off my original lot size, move stop loss to break even. Therefore, this trade is now risk-free, which means if price was to reverse from here, I would still bank 25% of my original position and break even, which means I haven't lost anything, I banked. Okay, so then we go to the next deviation here. I would then take another 25% off, which means 50% of my original position is now gone, banked. And then if price were to reverse from here, I then move my SL into a bit of profit here, just to connect it, probably beneath lows like I normally do. Once again, if price were reverse to me, I bank 50% of my original position, and I'm protected because and my SL's in profit, which means if the remaining of the trade 50% it was to fall down, I cut off my losses there. Then we have the 3 standard deviation. Once again, another 25% potential, 25% in this instant. Okay, and then what I do, I leave a runner on all the way to the top and try to maximize as much as I can from this trade. And if I just play this out, you see, bang, that's buy side taken, and that was the overall target of this trade. Okay, so that is essentially how you can capitalize as much as you can from a trade. Enter with extreme precision. Like, I want you to go and backtest this. I want you to study this. I want you to know this like the back of your hand, because guys, like this stuff is no joke. It's some serious technicals, risk management, and then this is what we teach highly in the groups as well. And what I do, I give a lot of information away from free, but it don't really bother me, because not many people will. I take it in to action it. They'll procrastinate. They'll think about, oh yeah, I'll do it next day. I'll do it whatever. I did probably just prefer me doing it and knowing that someone else is actually living and doing it than actually doing it themselves. Which is fine. Like, it's not a problem, but you need to understand like what I'm teaching here. Like, this stuff is like it's life changing. Like, you can go from hating your life to change it around in just by watching a few of my videos. And I wish I wasn't lying. Like, this is just facts. Like, you can literally open up, get a prop firm account. You can open up a brokerage account, put your own money in it, trade other people's money. You can utilize these strategies. You can utilize what I'm teaching you, and you can change your life just in a few weeks, months, just by learning what this is and just understanding risk management. So I know I give a lot away for free and stuff, and that's because I want to help as many people as possible. So hopefully, if you stay this long, I've helped you to some extent, and you are taking information away from this. But look, guys, I'm going to call it end of this video. It's been a pleasure, and I thank everyone who watched. Please like, comment, and subscribe. Turn on post notifications so you don't miss any videos, and I'll see you in the next video.